It is going to be an interesting day out here in the Asia-Pacific region. We're probably going to be expecting a rough ride across all of the asset classes. Bear in mind, of course, that historic no vote in Greece is going to ripple across the global markets. And, of course, Asia-Pacific, including Australia and New Zealand, will be the first markets to sort of get a taste of what to expect now that the Greeks are pushing back against their European creditors. And we're already seeing that translated through the foreign exchange space, as you and Karen have just run through some of the key numbers there, and the key crosses. The euro, of course, on the back foot. But closer to home here in Asia, we're seeing more abrupt moves already at this early hour across many of the other pairings. That includes euro-yen. Take a look at that. I mean, we were trading at 136 levels on the Friday's trading session. That's a pretty big move in itself. We're already seeing moves in the JPY. So that's going to probably hit the Japanese market, as you can imagine, because, of course, the Japanese have been exporting very, very heavily and require a cheaper yen in order to actually perform. The Australian dollar, which, of course, is a carry trade, we're already seeing massive moves in that one as well. We've cleared below that 75 handle in this morning's trading session. Who knows where that particular cross is going to go. So here in Asia, even though Asian economies and the financial system have very little exposure to Greece at large and probably the European Union, we will likely see the knock-on effect just because we're not sure what's going to happen with the negotiations with the European creditors, because if it does turn ugly, well, I'm not talking about the Greek exit, but you just have to consider, of course, the unfunded off-sheet balance sheet guarantees that the European governments have committed to. If that gets ugly, of course, there could be ripple effects in the credit markets as well. The Nikkei 225, this will be one of the first markets in Asia that gets up for trade. We did finish mildly in positive territory. And you know what? It's been really interesting with the unfolding of this European crisis, or the Greek crisis, I should say, because the Nikkei 225 has been relatively steady. If you look at the past 4 trading sessions in Japan, the market has actually gained ground. So it's been an area of comfort for investors there, perhaps because of the massive QE that underpins the gains that we see in the broader Japanese markets. But the other big issue that we're very, very concerned about, Steve and also Karen, is what's been happening on the greater China markets. I mean, an absolute crash in equities across the mainland, as you can imagine. Over the course of the last 3 weeks, it's taken the Shanghai Composite down more than 30+%. And every single day since the previous Sunday, Steve, we've seen authorities come out to sort of restore the confidence in the markets by cutting the interest rates to RRR ratios, relaxing margin financing, cutting transaction costs, transfer fees. And just over the weekend, Steve, we had, of course, emergency meetings in Beijing between the regulators and also Li Keqiang to stem the declines that we've seen in the broader equity markets, Karen.
It's a good point about the dual factors for investors, Adam. 5 o'clock in the morning, they're your time. I just wonder whether we're going to see an overreaction from Asia today because of the uncertainties and not knowing how to trade this. In addition to it, the liquidity problem with some US traders not working with the long weekend.
You make a very good point, Karen, because, I mean, many people that we speak to on CNBC Asia here say that, you know what, the Greek situation, it's been ring-fenced for the global financial markets. But what tends to happen when we've sort of missed those deadlines and the Greeks have said, oh, you know, we're not going to meet those payments, we see an abrupt sell-off, particularly when it happens over a Friday or over a weekend in Europe. What happens out here in Asia? The traders just sell first, ask questions later. I mean, that tends to happen. And even though, as I mentioned, Asia has little, if no, exposure to, of course, Greek financial assets, the question on everybody's minds is what about the ripple effect across the rest of the Eurozone? Nobody knows exactly how this is going to pan out. No one knows at this juncture whether the European leaders are actually going to acquiesce or blink or perhaps compromise with the Greeks now that they've got this no vote. And what would be the ramifications if Greece potentially were to exit the Eurozone, and what the ripple effect would be across some of the other periphery countries. Not to mention, of course, the guarantees for the ECM, the ESSF, is probably going to cost Germany, France and Italy quite a bit of money. So those are all the uncertainties that the traders are going to have to grapple with here in Asia today. Back to you guys in London.
Excellent, Adam. And let me just confirm, Adam, we may have been in the office before you today, and we will be leaving it after you tomorrow as well. So thanks very much indeed for that.